Welcome to Forex Daybreak, a daily podcast where we cover 8 Forex pairs and give you our view on the market direction for these pairs. If you are trading Forex market, this is the #1 show to start your trading day. Now, let's begin today's episode.
Good morning everybody and welcome to Forex Daybreak episode 30. In this daily Forex update, I will give you my view on 8 Forex pairs I analyze using Elliott wave principle. My name is Ville Vainio and today is 17th of September 2015. This podcast is recorded also as video and is available from the members area at ForexDayBreak.com. Show notes for this episode can be found at ForexDayBreak.com/30. Let's get started. And first, let's take a look at this. This is my website ForexDayBreak.com and I have lowered the membership fee at $10. Now what do you get with this $10? Well, you get this video analysis every morning to help you navigate the markets, and also get my Elliott wave ninja trading system to help you trade with this analysis. I have a 14-day free trial, so this is risk-free for 2 weeks. And if you don't like it, just cancel. It's one click to cancel the subscription. Okay, that's enough for this. Let's move on to the markets. And first up is Euro USD. Okay, and yesterday we saw a push upwards in Euro USD. The price now is 113.13, and this might be a small degree wave 2 correction. The one thing I'm slightly worried that if we take a look at this 1 hour chart, the decline from the high at 113.73 is in 5 waves, but it's overlapping. So this is my main concern with this. So if we draw this here, we can see that it is a 5 wave structure, but the waves are overlapping. So this can be a diagonal triangle as a first wave, a leading diagonal structure, and this would then be okay as an impulsive wave 1. And now we have seen a correction, and perhaps we will see slightly more upside to conclude this correction before this pair can continue lower. So I'm still expecting more downside on Euro USD. And of course today is the FOMC meeting. We will get the statement today. The meeting has been on for yesterday and today, and we get the statement later today. And this is of course the highly anticipated meeting where we should expect, or market is expecting, a rate increase in the US and for the Fed fund rate. So it has been close to 0.25, and they are expecting it to increase to 0.38. So this is very small increase, but the market has anticipated a rate hike for so long, so they want to see some rate hike, even if it's only a very small amount. So that's later today, and will be bringing volatility to Forex markets as well as other markets. My wave count is proposing that this is positive for the dollar, so perhaps they will increase the fund rate to that 0.38%, or they will come out with some excellent excuse that will convince the markets that the rate hike is going to be next month and the economy needs to improved just a little bit. So perhaps one of those options will be the result from this meeting. So more downside is expected on Euro USD according to my analysis and my wave count. And key levels today on Euro USD, 113.285 is the next resistance level, and 111.77 would act as support. The low yesterday was 112.13, so this will act as a support level as well. There's also one support level in 112.53, so those levels. But of course the volatility from the FOMC meeting will likely push through those supports if this outcome is positive for the dollar. The critical level here is the latest peak at 113.73, so if we go past that, then this wave count is incorrect, and perhaps this correction is still forming to the upside, since the decline from the latest midterm high 117.12 is clearly in 5 waves. So more downside I'm expecting in this pair. Okay, next let's take a look at dollar yen. The price action here has not been very impulsive. There is an overlap and there's a 3-wave structure. The recent move higher is at this point in 3 waves. The price now 120.41, and maybe the FOMC meeting will bring some life into this pair as well. I'm expecting more upside. If the FOMC meeting result is positive for the dollar, this should go higher. But if we take a look at this structure, well, that's not good. Let's see if we can draw this structure here. If we take it from the low, high to the low, so this is starting to look like a triangle now, and this is signaling totally different wave structure and wave count here. So let's keep an eye on this development with dollar yen. So if we continue on this similar price action, this might prove to be a triangle after all. So then this wave count would need a revision and something else is going on. But at this point I'm expecting more upside, mainly based on the 3-wave structure. In here you can see the decline from the peak at 121.74 to minute wave 2 low 118.6 is in 3 waves. So this is the main, or one of the reasons I'm expecting this to be an impulsive move. There is also a 5-way structure from the low, which is at 116.12. Okay, key levels here, 121.3 is the next resistance level, and 120 psychological level is still on my notes as the support level. 120 level has acted as a minor support level, but there is also a support level at 119.37. So those levels are ones to watch for once we get moving. The price action is quite mild at the moment, and perhaps it will be mild for the rest of today, since markets are anticipating the FOMC result later today. Okay, next is pound dollar. And yesterday pound got very strong based on some mildly positive news from the Great Britain, and we are now right on the 61.8% Fibonacci expansion level. 155.1 is the price now, and I have labeled on the charts the Fibonacci expansion levels. 156.373 is the 100% expansion level, and this would be the target for this correction. And this is following the ABC form quite nicely, so I'm expecting more upside on this pair. Key levels 155.2 is the next immediate resistance, and this is the 61.8% Fibonacci expansion level. 154.25 is the support level on the downside. So these levels are ones to watch for. If the FOMC meeting result is positive for the dollar, this would start declining, so I wouldn't trade this until we get the result from the FOMC. Okay, next is Euro Pound, which has declined back to the sideways range, and this is getting even more complex. I have now removed the previous minuette wave 4 label, and since this obviously is still on a corrective path, the upwards move that looked promising did not take this pair to new highs. So we are back on a sideways range, and it's very hard to say at what stage we are in right now. Key levels on Euro Pound. 0.7265 is the next support on the downside, and 0.7319 is the resistance level. So nothing major has happened here. Let's move to Euro Yen. Euro Yen yesterday declined heavily, or should I say day before that. Yesterday we got an upwards move. So the decline from the peak, which is at 137, is in 3 waves and is signaling a continuation of the upwards price action. So we should see a move higher with Euro Yen, because the 3 waves, it's very clear 3-way structure. We can actually check out the 137 level, and from that we can see a 3-wave structure, and now we should see a 5-wave move next. Well, this is slightly shorter than the previous 5-wave structure, but let's see how this develops. More upside is expected here, but not as sharp and as long as this previous upwards move, which is 482 pips, and if we project this 482 pips, we would see almost 140 level then. So I'm expecting more upside, but not as much as this almost vertical advance is. Key levels on Euro Yen. 136.62 is the next resistance on the upside. 135.7 is the downside support. Price now is 136.23. And next let's move to Pound Yen. And similar situation here as in Pound Dollar. So I have labeled on the chart the Fibonacci expansion levels. I'm expecting this to move at least to 61.8% Fibonacci level, which is at 188.71. So this is forming still the minute wave 2 correction. Yesterday I talked about that this is probably already over the correction, but this is now following the previous view I had. So Monday and Tuesday I was proposing the scenario that we should see a decline towards 184 levels, and this is what we got at 184.2 is the low. So I'm expecting this to move higher towards the first to 61.8% Fibonacci level and possibly all the way up to 100% level, which is at 191.47. So a nice upwards move is expected here, and 460 pip move still to come. So a good trading opportunity based on this wave count. Key levels here 187.325 is the immediate resistance. 185.35 is the next support level. Next is Euro Canadian, which has declined but not that rapidly. This is very anemic, the recent decline. It's still a 200 pip move, so not that small, but still quite mild is the price action been recently. My wave count is proposing more downside on this pair, but at this point it's hard to say if we have started the next impulsive wave down. Key levels on Euro Canadian are more or less the same than yesterday. 159, so 1509 is the next resistance level, and 149 is the immediate downside support. Price now 149.03. More downside is expected, but the price action at this point is quite hard to analyze because there's overlap. See on the 1 hour chart. So hard to say if we have seen the first impulsive wave down, or if we are going to see more upside and this wave 2 correction is still in force. So let's see how this develops. I have a trade here running, but I wouldn't necessarily enter any trades at this point since the FOMC can bring volatile moves to this pair as well. Okay, last we have US dollar Canadian, which has broken out of the triangle and made a push lower. The price now 131.75, and at this point this can be counted as a throw over from the triangle, which would result on a sharp upwards move. But let's see how this goes. I have been talking about previously that I would like to see a decline to finish this fourth wave correction, but this week earlier I revised the count slightly to make this whole triangle as a minute wave 4 correction. If we get a decline below the next support at 131 or 131.2 level and towards those levels and even lower, it's obvious that this fourth wave correction is not over yet. So let's see what happens. If the FOMC today is positive for the dollar, I think we should see a powerful move higher, and this would be in line with the view that the fourth wave is over and this is just a throw over from the triangle and will result in sharp upwards move. Okay, key levels in US dollar Canadian 131.4 is the next support on the downside, 132.7 is the next resistance. So those levels are ones to watch, but I think this will be a mild trading day for US dollar Canadian because the FOMC meeting is highly anticipated and will affect this pair as well. Okay, that's all for today's episode. Visit the show notes at ForexDayBreak.com/30 and leave your comments on that page. Remember that this podcast is recorded also as video and it's available from the members area at ForexDayBreak.com. Another great feature you find there is my Elliott Wave Ninja trading system, and both of these are included on the monthly subscription, which is now only $10. I have a 14-day free trial, so take this no-risk opportunity and go to ForexDayBreak.com to sign up. Thanks for listening to my show. Now go make some profits, and I will see you tomorrow. Bye bye.
Thanks for your interest in Forex Daybreak Daily Podcast. If you like this show, we hope you'll visit our website, www.ForexDayBreak.com, and tell your friends about us. Be sure to check the show notes on our website for this episode. Join us next time for another episode of Forex Daybreak.